Hello, welcome to Begin Academy. In today's video, we'll solve a problem on process costing. See, to solve a problem on process costing, we have three different scenarios. The first one is when there is abnormal loss and gain, and the second one is when there is no abnormal loss and gain, and the third one is that when the part of your output, that is output is nothing but the final product of one particular process, that is known as output. When it is transferred, that is when part of it is transferred and the other part is going to be sold. Now first we'll solve a problem when there is abnormal loss and gain. I have already explained these terms in my previous videos. So if you are watching this video for the first time, I would recommend you to watch that video and get back here. Now we'll look into the problem. Now the problem says the product of a company passes through three processes A, B and C. And the wastage of this process is 3%, 5% and 6%. So this wastage is nothing but the normal waste. Okay, and this waste is usually calculated on the input that you are sending into the process. Now keep in mind, input is nothing but the materials that you are going to introduce into the process. The input will always appear on the debit side of the process account and the output will always appear on the credit side of the process account. Now they are telling the wastage of each process is sold for 50 rupees, 150 and 400 respectively. Now what is this value? This value is nothing but, see, in process I am selling, the waste is 3%. This 3% of waste I am selling it for 50 rupees. That's what it means. Then they are telling 12,000 units have been issued to process A at the beginning of the month at rupees 1 per unit. This is nothing but the value of material that you are introducing into the product, or which means the input of the product. As I mentioned earlier, input will always appear on the debit side of the process account. They are given the particulars. They are telling there are three types of process, and then in particulars we have sundry materials, direct labor and direct expenses. So it is similar to the P&L account. All the expenses will appear on the debit side and all the incomes will appear on the credit side of the process account. Now they are telling, next what is that they are telling? The actual output of A, B and C are 10,500, 10,100 and 7,000 units. Output is nothing but the finished product. Okay, finished product will be happening in C process, and as I mentioned earlier, output will be appearing on the credit side of the process account. Now we are supposed to prepare process accounts, that is we need to prepare the process account of A, B and C. Now see, this is the pro forma of the process account. So this is the pro forma of the process account. So we have particulars, the number of units and the value of that number of units. Again we have particulars, units and the value of that particular units. Always we need to start off the process account with the value of input that has been issued. Now look into the question. What is it they are telling? 12,000 units have been issued to process A at the beginning of the month at rupees 1 per unit. So now the number of units will be 12,000. Now what is the value of this 12,000? It is 1 per unit. So 12,000 multiplied by 1 will give you 12,000. Now then I have taken all the expenses into consideration. So sundry materials, labor and direct expenses, these are the expenses that we have. For process A, it is 2,000, 17,000 and 500. That 2,000, 17,000 and 500 is what we have taken here. Now that is the only expenses that we have. Now we need to look into the credit side of the process account, and at the end we need to find out if there is abnormal loss or abnormal gain in this process account. Now normal loss, see, normal loss, it is always on the input value. Now what is the input value here? It is 12,000. That 12th, on this 12,000 we are supposed to calculate the normal waste. Now look into the question. What is the normal waste for process A? It is 3%. Now 12,000 into 3% if we do, we will get 360. That 360 is what we have taken here. Now what is the value of this 360? They are given in the question. Now look here, they are given in the question, the wastage of each process is sold for rupees 50. This is for process A, process B and process C. Now process A wastage is sold as rupees 50. That 50 is what we have taken here. That 50 is what I have taken here. So now normal loss is done. Now then I need to find out what is the value of abnormal loss. Now before finding this abnormal loss, you need to write down by process B account, because this value has to be transferred to the process B account. Alright. Now in order to find out whether it is going to be abnormal loss or gain, first write down by process B account, and then what is the output of process B. Now look here, actual output of A, B and C are 10,500. That 10,500 is what I have taken here. Okay. Now when actually solving the problem, we are not arriving at this value. We have directly taken the output which is given in the question. Now debit side total will come up to 12,000. Credit side also will come up to 12,000. Now out of 12,000, see, 360 is the normal of wastage. So 12,000 minus 360 minus 10,500, because 10,500 is the value of output. Okay, if you minus it, you will get 1,140. This 1,140 is nothing but the abnormal loss. See, I have introduced 12,000. So this 12,000 has to come out as an output. But how much is coming as an output? Only 10,500 is coming as an output. Now, wastage, they are telling 360. Now what happens to the remaining balance? That will go on to the abnormal loss account. 1,140 is the abnormal loss. Now we need to find out the balance of this abnormal loss and the process B, amount of balance that has to be transferred to process B. Now in order to get this value, we need to find out either of these values. So there is a formula to calculate abnormal loss. Now how do we calculate abnormal loss? Now look here, this is the formula to calculate the abnormal loss. Abnormal loss is nothing but the normal cost divided by normal output into abnormal loss units. Now this abnormal loss units we have already found out. What is the abnormal loss units? This is the value 1140. Now how do we calculate the normal cost? See, the formula to calculate normal cost is your total debit value or the total cost minus the normal loss value. Okay, now what is the total cost? Total cost is nothing but add all your debit side total, that will come up to 31,500 minus the normal loss value. What is the normal loss value? It is 50. This 50 is what we have taken here, divided by normal output. How do you find out normal output? Normal output is nothing but the input of materials that you have introduced minus your normal loss will give you the normal output. Now what is the value of materials that we have introduced? 12,000. 12,000 have taken here. Minus what is the normal loss? It is 360. That 360 is what have taken here into abnormal loss units. So if in case you solve this, we will get the value as 3080. This 3080 is nothing but the value of abnormal loss. Now the value of abnormal loss is 3080. Now if you take the total of debit side, it will add up to 31,500. So 31,500 minus 50 and 3080 will give you 28,420. This 28,420 is the balance that we are going to take it to the process B account. Okay. Now we'll start off with process B account. Now we need to start off with the process B account with the balance that we got from the process A. Now what is the balance that we got in process A? See, 10,500, 28,420. This is going to be the input of process B. So that balance is what I have taken here exactly, which is 10,500 and 28,420. After this, we are supposed to take all the expenses into consideration. Now these are the expenses which has been given in the question. Now see, sundry materials, labor and expense. Now look into the question for B, 6,000, 24,000 and 150, and that value is what I have taken here, 6,000, 24,000 and 1,500. So, sorry, it is 1500 is what I have taken here. And then we need to take the normal loss into consideration. I have already mentioned this normal loss is always on the input that you have introduced into that particular process. Now, what is the input that you have introduced? 10,500. So, 10,500 into what is the normal loss percentage for process B? We need to look into the question. Now, look here, the wastage of this process is 3%, which we have already taken into consideration for process A. Now for process B it is 5%. So for process B it will be 10,500 into 5%. If you calculate this, we'll get the number of units at 525. Now what is the value of this 525? It is 150. How did I get 150? That is what they are given in the question. Wastage of each process is sold for 50. 50 we have taken for process A. Now for process B it is 150. So 150 is the value that I have taken now. Now initially when I saw, I thought there might be an abnormal loss, so that is the reason I have taken here. But in this process we have got something called as abnormal gain. Now how do you find out the value of abnormal gain? So let's take it as by process C account. Just take the output. Now what is the output? See, the output of process B is 10,100. So I have taken 10,100. See, what is the material that has been introduced? 10,500. Out of 10,500, they are telling 10,100 is the output. And if you minus that, you will be getting 400. Alright. Now 400 is the remaining number of units. But what is the normal loss? It is 525, which is above this unit. So it will become the abnormal gain. So the difference of 125 units, that will be the abnormal gain. And that is what I have taken here it as 125. Now we are supposed to find out the value of abnormal gain, and this output, this is going to be the balancing figure. Alright, now we need to find out the value of this abnormal gain. It is the same formula, which is abnormal gain. So this is abnormal gain is equal to normal cost divided by normal output into abnormal gain units. This abnormal gain units we have already taken into consideration, in the sense we have already calculated. See, here we have taken it as 125. That 125 is what is appearing here. How do we calculate the normal cost? Normal cost is nothing but the total of your expenses, that is starting from process A, add up all the materials, labor and expenses, that will add up to 59,920 minus the normal loss value. What is the normal loss value? 150 divided by normal output is nothing but the number of inputs that you have introduced. What is the number of inputs that we have introduced? It is 10,500 minus what is the normal loss? It is 525 multiplied by this 125. It is nothing but the abnormal gain units. So that will come up to 59,750 divided by 9,975 into 125. If you solve this, we'll get the value as 749. That 749 is what we have taken here. Now the total of debit side is more. So make sure that the units of your debit and credit should tally. So it is 10,625 and the value will add up to 60,669. So from this value, if you minus the value of normal loss of 150, you will get the balance that has to be transferred to process C, which is 60,509. Now this balance has to be carried forward to process C account. Now look here, we have already done the process C account. See, this is the pro forma of a process C account. See, you should start off with the balance that you have got in the process B account. See, process B, how much I have got? It is 10,100 and 16,519, and that is what we have taken here. It is 10,100 and 60,519. And then we are supposed to take all these expenses into consideration. So this is taken from the question. See, for process C it is 1,000, 11,000 and 400. That 1,000, 11,000 and 400 is what we have taken into consideration here. And then they are telling there is a normal loss. So how do we calculate normal loss? So it is always on the input value. What is the input value? 10,100. What is the normal loss value? The normal loss is 6% for process C. So 10,100 into 6% if we do, we will get the value as 606. Now what is the value of this value of 606? At what rate it has been sold? Now look here, the wastage has been sold as 150 and for process C it is 400. So that 400 is what we have taken into consideration here. Okay, then just write as abnormal loss, and then we need to, that balance of this process is going to be the finished stock, because this is the last process. Okay, now what is the input? This number of units we are supposed to find out. We are supposed to find out whether there is going to be abnormal loss or abnormal gain. Now what is the value of finished stock or the output of process C that they are telling? See, the output of process is 7,000 units. That 7,000 is what we have taken here, 7,000 units. Now what is the input that has been introduced? 10,100. Out of 10,100, 7,000 minus 7,000 if you do, that will be the value of output that you have minus. From that deduct the value of normal loss, you will get 2,494. It is the abnormal loss. Now these are the two values that is left out for us to find out. First, by making use of the formula, we will find out what is the value of abnormal loss, and this value of finished stock will be the balancing figure. Okay, now see, this is the formula to calculate abnormal loss: normal cost divided by normal output into abnormal loss units. How do we arrive the normal cost? Your total expenses, which is 72,919, minus the normal loss value. What is the normal loss value? 400, divided by normal output. How did we get this normal output? The input that you have introduced, which is 10,100, minus the normal loss units, which is 606, multiplied by the abnormal loss units. This abnormal loss units is what we have got here, which is 2,494. If you solve this, you will get the value as 19,050. That 19,050 is what I have written here. Now the total of the debit side will add up to 72,919, and this will also add up to 71,919. So from this, minus 400 minus 19,050 will give us 53,469. This value is nothing but the value of finished stock. Okay, and this is how the entire process account